Hi everyone, I'm Russell Muldoon from Montgomery Investment Management. Welcome to this week's video insight. Well, we are pleased to report the reporting season has been extremely kind to both the Montgomery Private Fund and the Montgomery Fund this year. The bulk of our holdings have not only delivered extremely pleasing half-year results and generated higher than aggregate earnings growth in the broader market, but when coupled with recent acquisitions, positive outlook statements, and positive earnings guidance for the full year, share prices in some cases in some of our portfolio holdings have risen materially. This of course has had a positive impact on performance this calendar year, with net returns of 6.19% and 4.13% respectively as of the 6th of March. This compares favourably to the market's return as measured by the ASX 300 accumulation index, with a return of just 2.88% over the same period. This is a pleasing outcome for our investors and we're extremely proud. Now, driving these returns, of course, are the individual holdings which make up our portfolios. One of these holdings, with a portfolio weight around 3.5% currently, is in a similar way to the fund's largest position in SEEK, which has used the maturing footprint in Australia to fund an international expansion effort, which is now driving the group's impressive earnings accretion, has clearly taken notes off SEEK and is following closely in its footsteps. That business is car sales, which locally continues to grow, albeit at a slowing rate. Its share of auto-related browsing, and by almost any measure, be that revenue, profitability, share of consumer browsing, share of total page views, or page views per vehicle, clearly shows that CRZ is leading, extending its lead, its reach, and in mindshare in the Australian market. But it's globally where management is clearly targeting the next leg of growth to come from. Like SEEK in its early stages, for a business which at this time last year had absolutely no international, had no assets offshore, they've made $234 million in acquisitions in the past year, signalling a radical shift in strategy. And with it, car sales has laid claim to be has a title of the world's fastest growing auto advertising portal, with large incremental investments in other market leaders, other #1 websites in Brazil, Thailand, South Korea, Malaysia and Indonesia. Now in doing so, and we have to think about this a little bit, it also has created a platform of huge upside potential from being exposed to emerging market players. Emerging market players which have collectively 7 times the Australian market size in terms of vehicle sale volumes. Think about that potential here for a moment. Car sales now effectively has a presence in all meaningful motor vehicle markets in Asia, and now operates in markets representing 10% of global vehicles in use and 11% of global new car sales. Excluding Australia, we think these markets are primed for growth based on vehicles per capita moving towards the developed world average of 60 to 70% versus the current average of 25% presently. And think about it in terms of if management can replicate exactly the same success they have been able to do in the Australian auto classified markets over the last 10 years. So over the next 5 to 10, if just the $234 million incremental investment they've made to date, and we expect more to follow, was to generate the same return on equity that the Australian business does, this could equate to another $117 million in after-tax profits being delivered by the business's international operations. That's more than double the business's current level of earnings. And therefore, we believe it's a business whose underlying momentum and fundamentals are hard to ignore, and which all point to a business with very bright prospects in the years ahead. Well, that's all for me this week. Please remember to follow us on Facebook and Twitter, and I look forward to updating you on how car sales is progressing with its plans and international expansion in the months and years ahead.